What's up? How we doing? Come on in, man. We've got big work to do here today. We are 236 out from the close up here of bar 35. And we had a big old sideways range. I think it put everyone to sleep here from bar 15 through bar about 30. Man, that's 15 bars. That's a long time here of going sideways, single bar sideways range right here. This is ugly. This is very, very ugly, very tight. But volatility luckily actually maintained through there. ATR 53 this time of day. That's a tremendous ATR. So we're 2 minutes out. Gonna see how bar 35 closes up here. And I might be slanging off the rip here in a minute 50 out. So let's see what we get. How we doing? Good morning, good afternoon. How are we? Come on, Bears. Take us a hair lower here. "90 seconds out. It will be incredibly obvious when I am in a trade. You shall see that shortly if these Bears can get the job done here for me. There you go. All right, beautiful. 38 seconds out. Okay, here we go. Place him, Bears roll over, grab it. Do it to him. See if I can get a fill here. Gonna need the Bears to take out the wick low of 35 in order to get a fill. Give that about 15 more seconds. Bulls pulling it on back. Swallowing up bar 35. All right, no fill, no trade. Bears don't want it. Next bar. Bar 36. All right. Richard Gamma, how we doing? Cold? What's up, brother? I gotta tell you, it's a beautiful move here, man. But I stand by this. I think from bar 15 until about bar 30, I think it may have killed everybody's mood here for the day. But I wouldn't be so quick to let yourself get down because we are away from that single bar sideways range. At least for now. Let's hope it stays that way. And these Bears can get some work done here. Take us a bit lower. Give me a nice clean close. All right, halfway through bar 36. Bears trying to wick us all back. Sitting as effectively a doji right now. I'm going to need those bears to get us down through the wick low 35. There you go. Let's keep that up. I don't want it growing so much, but we have room. The ATR here, which is the average true range. That's the average range here of a 5-minute bar, is 53. So we've got plenty of room. There you go. Okay, so we got 31, 33, then 34, 35. 32, big wick. Effectively an inside close, just barely, but the wick on 32 is massive. 33, just barely closing beneath the wick low of 32. The reason I say all this is because I'm kind of in a any reason to get short mentality. But it's not quite as extreme as if we had some massive bear trend, right? Because this is a much shorter lived bear trend. Basically just the last, well, 5 bars, which is less than a half hour. Okay, so Bulls trying to bounce this. I've got my eye on that wick high of bar 35. Let's see if the Bulls want to turn this into... It's very early. I'm speculating, okay? A soft bear channel. We have had not a single bullish push. It's just been a straight trend since, in hindsight, basically starting on 31-ish. Honestly, more like 33. 31 was still an inside close inside the wick low of 22. So we're 4 minutes out. Let's see what we end up getting here on bar 37. Now, when you get 37 here, taking out the wick high of bar 36, you got to keep an eye out here for a sideways range. Right? Now, God, I hope and pray that we don't see bar 15 to bar 30 repeat itself. But you got to be aware of that possibility here on this little sequence, 35, 36, 37. By the way, if you're new here, when I'm calling out numbers, I'm talking about, at least in this context, I'm talking about the bar number. All it is the bar number from the New York session open. I don't know how traders operate, especially when trying to communicate with other traders who live all over the world in different time zones without numbering their bars. It's ludicrous. Volatile though, man. ATR 51. All right, so after you get bar 36 and now you have 37 trying to swallow up the low of day, which is the wick low of 30, probably 36. It's very short-lived. Obviously, it's not like there's any kind of stop hunting opportunity there, of course. But that wick low of 36 holds a lot of importance because if we take it out and then hesitate a lot, that tells me that we're probably looking at a sideways trading range, which means getting short is, well, at least in the lower third of what may become a sideways range is bait. All right, 20 seconds out here until we close up bar 37. All right, there's the rollover. Any news at 1 o'clock? If you're talking Eastern time, that's about 25 minutes from now. No, we just have the Fed's cook is speaking at that time, which in 2026 doesn't really make the market move all that much. I mean, reality is this, it's not 2022. I don't know if you guys were even around. Who was around trading in 2022? Anybody? I want to get a gauge. How many of you guys are like newer and how many have actually been around for, let's say, 3 years or more? But in 2022, anytime a Fed member, any Fed member said anything about inflation, the market would move. That's not the case these days at all. Inflation, as much as people like to bitch and moan and talk about it, the market is in charge, not you or the narrative on the internet. So the market doesn't really give a shit. Unless someone says something really, really direct and that person's wording carries a lot of weight and it's something that the market has not expected. All right, let's see how long you guys have been trading here. 5 years, 1 year. 5 years, 5 years, 3 years. 5 years, 1 year. Has anybody been trading longer than me? How many of you guys have been trading for more than 10 years? Anybody? I know we've got some people in here who've been trading like 45 years. All right, we are halfway through bar 38, by the way. It's looking good. 30 years plus, there we go. I knew it. By the way, if you haven't been trading that long, let me tell you something. I think as time goes on, you should internalize this now so it doesn't, you don't have to learn this the hard way. Nothing is new, and what has always worked continues to work, which is price action. And the fads, they come and go. The big market crashes and these super cycles and these things that you hear all these buzzwords about, none of it is new. It's all happened. It's just a little bit different each time. But you know what remains true and will always remain true? If you ignore the context of the market, and let's say you don't ignore it and you identify context as, hey, we're in a trend right now. If you attempt to trade counter trend, this took me, like, guys, I used to push back on this. Like in my early years, I was a contrarian, just like all you probably are. Every human that comes into the market is a contrarian. You want to do the opposite because you feel like that's the most logical way to make money. If the market's down this far, it will probably bounce at some point, right? Which is not wrong. Unfortunately, the problem isn't logic, the problem is timing. And when you start to really study price action, I think almost everybody eventually comes around. And by the way, part of the reason I push back on this is because you would see people say, the trend is your friend and all this bullshit little... Hang on. I'm going to give that 15 seconds, see if the Bears want to give me a fill. Come on, Bears. Ooh. Do you want it? No fill, no trade. Next bar, moving on. You always hear people say, the trend is your friend, and I'm like, that sounds fucking stupid, so I'm going to push back on that. And when you start to study price action, I think rather than just accepting these dumb little sayings that everyone on day 3 likes to repeat, you start to understand why you do certain things. And if you think about this, if the market's moving downside, for example, really internalize this, please. It's going to help you move a lot faster in your career. The big players are initiating that move because they are the massive majority of volume in the market, and retail is kind of just the little fish that swim with the whale, or with the whales. Again, the market is bigger than any one participant. That's also really important to understand. So when you start to understand that, you kind of start to understand that, hey, the institutions are clearly kind of good at this. They're not here to lose money. So if they're willing to make bar 11 happen on large volume, and it's not just them, it's everybody, but of course they're a part of it, why would they still be selling as price moves this far downside? Because when you come into the market, are you guys following me at all? When you come into the market, this big move, you immediately think, I should buy that. We're going to bounce all the way back. Okay, well, they have more data than you. They've been doing this longer than you. They have far more money than all of us, the institutions. And if they're willing to create this liquidity that takes the market downside and still be selling lower and lower and lower, why would they do that if they knew that it had negative expected value to continue to sell as this bar goes further and further away from what at that point was the mean of the day, which was like up here before that bar? If they're still willing to be selling down here, which is continuing the move, now obviously there's some stops getting taken out here below 5, which contribute to it, I understand. Okay, why would they do that? Because they think this won't matter. This little gap they think won't matter because they think the market's going to continue heading lower. Now, it's more complicated than this because they might be taking positions for 30 minutes from now and or for 3 weeks from now. Okay, but if the vast majority of the time we as contrarians, when we come into the market, everyone thinks that way, bar 11 would just immediately V-shape recovery back up to high of day, then bar 11 would be a lot smaller than it was, because you would not have continued selling pressure from institutions on the lower half of this bar, which continues to grow bar 11. Now, I'm not saying that it's a certainty it goes lower, but this is all probability. It's all data. And all that can be wrapped up in saying, you know what? The institutions, the ones who drive the bigger moves, they are not here to lose. Okay, which just comes back to RAM. I don't want you to think about the institutions so much. I want you to think about price, which in turn, you're subconsciously thinking about the institutions, but you're really just looking at price, because price is truth, and it cuts out all middlemen. And when you assess price and you assess the context of what's going on in the price action, you're able to do logical things. And if you're just a complete contrarian, you would have looked at bar 14 and said, wow, I need to buy bar 14 because we're headed back to high of day. And then you get stopped out on bar 32, or at least 31, or maybe even 15. J Ham says, does RAM have a monthly subscription? No, sir. No, sir. The tomb is no bullshit. You buy once, you have access for, the deal right now is, typically it's 6 months in the tomb, but if you apply code BIG, we give you an additional 6 months free, which makes it a full year in the tomb. So you pay once, you have access to everything immediately. Otherwise, there's so much fucking content in there that with a monthly subscription, we'd be doing the drip out style where we drip content to you. And, right now, we'll see. I don't know. But right now, that's not my style. That's not my style. There's no time for dripping out content. You know what I mean? I don't believe in learning that way where, let's take our time. We have 18 months to do this. Dude, there's no time. There's no time. Damn, Bears, come on now! These Bulls! Bar 39 closing us up above the open of 38. There we go, Bulls. All right, we just get a headline. What's up? Last headline coming through is Trump just saying New York should change its policy on data centers immediately. That was 5 minutes ago, 6 minutes ago. So I'll let you know if I have something coming through the news feed that just caused that volatility there. All right, so we got 2 minutes out here from the close up of 40. Just threw a monkey wrench into things. We'll see how the market deals with that volatility, man. That's tremendous. Tremendous. How we doing, guys? How we doing? Hope we're doing well. Question. Nico, what would you suggest is a valid position size for a 50K eval? I'm going to assume you mean $2,000 drawdown in that eval, trailing drawdown most likely. Currently going for $150 per trade. My system has an 11R maximum drawdown, but it's taking me, well, we'll touch on that, but it's taking me 3 months to pass one eval with that sizing. Unacceptable. Unacceptable that it's taking you 3 months to pass one eval. Okay, first of all, an 11R maximum drawdown is not true at all, because if it's a trailing drawdown, if you're in the money on some trades when you're near the high, right, of your balance, and then it pulls back and stops you out, you're knocking off maybe a half R of that, okay? So it's not 11R, it's less than 11R. I'm not saying trade smaller. You guys know my stance on evals, by the way. Look, you have to assess your own financial situation and determine what's up. But what I will say is when you're trading evals, when I'm trading evals, I'll say, if you are a positive ROI trader, you absolutely need to be concerned with what? Opportunity cost. Opportunity cost is absolutely everything. Okay, if you're positive ROI, meaning you look at your expenses for prop firms and then you look at your payouts and you're like, oh shit, the payout side is more. Basic business 101, big dog. You need to go faster. If you're taking 3 months to pass evals, you got a problem. 3 months is 3 months of potential payouts. That's a quarter of your year, dude. That is a quarter of your year that you're fucking around in payouts. We don't have time for this, you guys. For example, Apex, you can pass in 1 day. At a lot of firms, it might take 3 or 5 days. Either way, my number one concern in any eval or test account is opportunity cost. Now that changes if you're not a positive ROI prop trader, meaning you are in the red, you're not in the black yet, or the green, people say today, then you should probably, what I would encourage you to do is buy one eval, trade one micro, and now your risk is what, $20? $100? Whatever the test account costs you. Trade one micro for a few weeks until, and by the way, this is where you brute force the discipline and get a track record. You're like, Nico, I'm not going to pass with one micro. Yes, that is the point. Your risk is limited to the cost of that eval, and you're trading so damn small, one micro, that your risk is it's as small as you can get it. One account, one micro, get to the point where you're like, okay, I have a positive expected value. I'm performing well in these trades. Then get into fundeds, get payouts. When you look at the balance sheet, you're like, here's my expenses, here's my payouts. Oh shit, I'm a positive ROI trader. Now the number one concern on evals is not cost, it is time. Time. If you're positive ROI, 3 months to pass an eval is absolutely unacceptable. That is way too much time. That is a fucking quarter of your year. You only have 12 months to make as much as you can this year. If you're spending 3 on one eval, you're going way too slow. You will lose to everybody else who is just slanging, who's positive ROI, even if it's by 1.1x. They're slanging. Time is money. Big talk. We don't have this amount of time. Does that make sense? That's my outlook on it. But you have to really take to heart that if you're not a positive ROI prop trader, I think you should trade actually incredibly small until you are, and then scale. Most people, they trade a certain size when they're not positive ROI, and then when they are positive ROI, they bump it a little bit. I live on the extremes. If you're not positive ROI, one eval, one micro. The second you are, and you're at the point where it's like, okay, I've taken some payouts, I'm a profitable prop firm trader. Now it's pedal to the floor. We need to go. There is no time. That makes sense? Hope so. We still got the market doing not too much here. Still inside that wick high of bar 40. You know I'm watching, man. They say, I guess I'm just not confident enough yet in myself to go bigger sizing. I'm not saying go bigger sizing. Well, in the eval, look, for me, I do. In fundeds, I'm not saying go bigger sizing. In the fundeds, I believe in horizontal scaling. Don't get me wrong on this, okay? But in evals, let me explain something to you guys. Every scaling, let me say this, every industry as you scale has what's called diminishing returns. But what, like, newer, and I don't mean this, broke is not a mindset, it's a situation. Okay, so it's not a dig. I've been broke, okay? Like, it's not a big deal. Fucking sucks, but everyone has probably been broke at some point in their life, or many points in their life. What broke people get wrong is that they look at those diminishing returns as if it's a fucking bad thing. The goal is more money, okay? Would you take a 10% positive ROI on a $100 million spend, or would you take a 10x ROI on a $10 spend? Come on, man, you know what I mean? Just to be extreme about it. All right, we got 33 seconds out. Question, how long typically does it take to learn RAM? Depends on the person. Depends on the person. If you go fucking all in and you're studying for 10 hours a day, we've had people learn it and actually go from being, there's reviews on the website. People that were in, they were a 2-member for like a month, 2 months, 3 months. There's multiple examples. They went from blowing evals, losing a bunch of shit to consistently taking payouts. And then, if you, of course, if you just join the tomb and you fucking do nothing, you're still gonna suck, homeboy. Of course you are. Like, come on, this is real life, man. I don't know. It's gonna take however long you're committed. Or I should say, based on how committed you are. And even then, man, trading is really fucking hard, so this is the big leagues. All right, we got 41, rolling over, of course, 4 minutes out on bar 42. Yeah, by the way, a little tip on evals, guys. In fundeds, you guys have seen I'm trading smaller per account, scaling horizontally. So I'm trading normal scalps, intraday swings, everything in between, regular day trades. But on evals, the quality, I open it up. My only concern with evals is time. That's it. And, self-respect and staying in good graces with the prop firm, which is why I don't just fucking gamble them on CPI like some people do. But since I'm trading bigger per account on evals, because my number one concern is time, because we don't have time for this. I need to get through and get back to fundeds or get in more fundeds or whatever the goal is for trading those evals. Since I'm trading bigger per account, it can be harder to deal with that trailing drawdown, where in funded accounts, it's not that big of a deal because you're trading smaller per account, scaling it horizontally. But in evals, I lean way more heavily to scalping, especially in range markets. That's not necessarily true so much in trend markets, but in range markets where it's a lot more difficult to trust that we're going to make any kind of sizable move away from the mean. I scout much harder since I'm trading bigger and that trailing drawdown becomes a problem if it goes in the money and then reverses on you in the evals because you're trading bigger, right? But again, you shouldn't be doing that if you're not a positive ROI prop trader. I mean, actually, you know what? I hate the word should. Do whatever the fuck you want to do. Okay, but if it were me, I would not be doing that. Well, we got 55 seconds out here until big 42. Come on, 42. What is RAM? RAM is the methodology that I trade. It's the Roensch action method. Yeah, we got 20 seconds here. 42 will be closing up. Probably going to be an inside close, almost certainly. If it did grow way up here, then we're running the risk of it being an outsized bar. So I'm going to watch this guy close up, roll over. If we can get 43 closing up here, to me, that's like the very first bar that would even have me interested to the long side. But it would still be a little early. But I would probably put it on if it's clean. Beauty. Here we go. 43. Looking pretty good. I'm watching that wick high of 40. Alright, so I need to see bar 43, ideally grow a bit, maybe close up in this region. Above that wick high of 40. Now I know that, I get it. You might look at that and say, it seems kind of arbitrary, doesn't it? No. Nope. Nope, it would not be a coincidence. Now what especially wouldn't be a coincidence is if the bulls take it up through, and then in the last like 6 seconds of the bar, pull it back and close it like one tick inside the wick high. With a sample size like we're dealing with on the volume on NQ, Nasdaq futures, that's not a coincidence. It's a little bit of bull insecurity. And on a continuation trade, I want all the security I can get out of the side that I'm betting on. All right, we got a minute 22 out. Clark, that's right, big dog. Hey, if you wouldn't mind, I appreciate you pressing the like button here on the YouTube live stream. Or, my man, hit that dislike button. Hit that dislike button. Does the same thing for us. Appreciate you doing so. Helps out a whole bunch. Okay, we got about 30 seconds here. Come on, bulls, you bunch of babies! Get up! Oh, you're killing me, bulls. Alright, you see these insecure bulls? So, watching bar 44. Now, my question... nah. I'd probably look at this much more like this. See that? Big soft bear channel. Now, this is a big pullback, okay? I'm not calling it that. I'm saying that this has potential to become a soft bear channel, and if it does, I'll be looking to get short after maybe 2 bars closing in this region. I'll short the shit out of that thing. Or if we end up heading higher, then I'll be getting long. Whatever, man. If you've learned anything from being here, I don't care which way it goes. Just give me a clean sequence or setup in general if it's more of a range trade. Navin, how did you do that, man? Can you send a YouTube emoji in the chat? Is that a thing? I know that if you're a channel member, you can slang Roensch Capital emojis. I didn't know they had the YouTube one, though. All right, 3 minutes. 3 minutes. Bar 44. Beautiful. I like it. I like the way that's looking. Keep that up, bulls. 5 minutes feeling a little bit slow here for me today. Do I dare? 2 minute. I like the 5 better right now. The look on the 5 is cleaner. I can wait 2.5 minutes. It's all right. Alright, you bulls. Let's do it. Let's do it. Okay, so 90 seconds. If the bulls can maintain this, close above the wick high of bar 40, and obviously not grow like another bunch of points and then wick back, or just grow in general and become an outsized bar. Basically, if it threads the needle, stays right around here and closes up, then I've got a stop limit buy here for the bulls. And I would risk the signal bar, put it on, and accept the outcome and move on my life to the next trade. But I gotta tell you, I've gotten teased. Has it been twice or 3 times today? You know, usually when the ATR is 52, I'm not getting teased too much because usually the volatility, you know, makes up for that and gives me more consistent fills. But we've been getting teased a bit here today. That's all right. That's all right. 45 seconds. Yeah, I'm not too worried about that wick high 31. What I am watching, though, is this would actually be kind of the low of that previous single bar sideways range. That's all right, though. It's been a little while, and the context has shifted since then. All right, bulls. Hold it up, man. I don't like that insecurity. I hate that insecurity. All right, place him on the rollover. Beautiful placement. Oh, just perfect placement. Perfect timing. Now it's up to the bulls to get a little cocky and give me a fill, which we'll see if they're able to do. 13 seconds. Gotta be kidding me. Teasing me. All right, no fill, no trade. Pull it, next bar. Bar 45 here. We've got a bunch of baby bulls at the helm here. Chat says, man, I went long at 425. 29,425, I assume you mean, got stopped and didn't re-enter. Yeah, so if you're gonna get long, again, this is why contextually I think it's so important. Again, do whatever you want to do. You're a grown man. But after many years of having to learn all of this the hard way, I'll just say, assessing the context helps you a lot, and it stops you from trading this side of the move to the long side, which is very difficult to get long in this move and make money, and helps you trade the back side, or the side of the V, which again, V's don't happen too often, where it's actually recovering. But you would find all this just by trading price action. Don't even think about what I just said. If you just trade the price action and identify the context and then do logical things based on the price action within that context, as long as they fit, you can manage risk properly. It covers all of this anyway. Which is why I love RAM so much, because it simplifies things while still covering all the necessary bases. And by the way, no one's claiming that, like, you are not gonna, just because you start trading RAM doesn't mean you're gonna win every trade. There is nuance here. There's discretionary decision making on the higher levels of this. But you know what the beautiful thing is? I don't have to win every fucking trade. And you're not gonna win every trade. I mean, come on, dude. Are you here to have the ego of having a massive win rate? If you're here for that, I can tell you how to get a massive win rate. Trade a 1-to-100 reward to risk ratio, and you're gonna have a win rate of like 97%. It's gonna be fucking awesome. But you're still gonna be a losing trader, most likely. So, I mean, what's the goal? All right, we got 2 minutes out here until the close up bar 45. See how quick that goes? It's no big deal, being a little patient. So those of you guys who are wondering, why do you pull that order after 30 seconds? I actually just posted a video on the channel about this yesterday, but see this hesitation on bar 45? We're almost all the way through a 5-minute bar, and we haven't even taken out the wick high of 44. That's why. That's why. I don't want to be a part of that hesitation to the buy side, to the bull side, the long side, right? So we've got 18 seconds, and bar 45 here will be rolling over. We'll get the open at bar 46. Sam, my man, doing tremendous. Hope you guys are all having a good day. Fuck, and if you're not, man, turn it into one. Turn it into one. Fuck it. All right, bar 46, 450 out. Closing inside the body of bar 44. So now we got to see if 46 wants to take out that low of bar 44. Watching that. This bar, really these next couple bars, a big tell whether this is going to turn into an actual reversal, and then we have to deal with that previous sideways trading range, or if the bears are going to turn this guy into fade it and turn it into what really would be a wide, soft bear channel. I've gotten teased. Is that 4 times now? At least 3. It's at least 3 times here on the stream. It's only been an hour. 59 minutes. And they don't want to give me my fills. That's alright. I will get my fills, damn it. Bar 46. Heading back up toward the wick highs of 44 and 45. Now, again, very early to say, but we'll see if this does end up turning into more of a sideways range or if we end up picking a direction and going. Honestly, back downside would be tremendous. I'm open to the upside, but there's just more to deal with up to the upside. Back downside would be great. Question, 21 EMA or volume weighted average price? That's actually a 20 EMA. And it's also the thing that I refer to the least. It's kind of bottom of the barrel relevance, so it's just up there, looks pretty, keeps us from getting dizzy. But you take it away, very little would change about my decision making. Yeah, what's SpaceX at now? Holy shit, it's at 134 now? Are you kidding me? So you guys remember when we talked about SpaceX quite a bit during IPO week? You know, if you were, and by the way, it's okay, like, the market is a complicated place. We're not born knowing any of this, so like, it's okay. But I will say, if you were one of the people that kind of looked at SpaceX and you're like, holy shit, I want to load the boat because this thing is going to 10x. I need you to understand that in order for SpaceX or any stock to 10x, the market cap of the company also basically needs to 10x, right? And when you're dealing with a market cap of $2 trillion, that's a lot of money that's got to flow in. You know, SpaceX, the way that I look at that stock is it's a long tail investment. It's the kind of investment that a fund loads up on to take care of, ideally, or to bet on taking care of the company, of course, but taking care of the fund after, like, for the next generation. Because how fast can you really grow a company like SpaceX? You know, we're kind of in the phase where, you know, God forbid a rocket blows up. That's a big deal for the company. You want to be beyond that, where, you know, rockets are going up so many times every day. All right, I'm Phil to the long side. Beauty. That's fine. So that's basically 44, 45, 46. I'm filled long. And risk is set beneath the wick low of 46, which is fine. That's the, you can call it the early trade, which is fine. I'm cool with that. ATR is basically 47. And I don't expect this trade to, you know, be a quick one. Unless it reverses immediately and stops me out, in which case it may be a quick one. Yeah, 135, I think it was 135 was the allocation price. It opened higher for SpaceX. What helps you be really patient with your entries? So, the only answer to this question, I get it. You know, everyone kind of wants there to be an answer. I can give you the answer, though you might not like it because it's not a flip of the switch answer. The answer to being patient with your entries is having a track record where you look at it and you're like, oh, when I do the right thing, which is follow my methodology, I get the entire fucking goal of what I'm doing here, which is profitability, and I make money. If you're a positive ROI trader when you follow your methodology, whatever that may be. Then it's really easy to be patient with your entries, right? Because you're like, when I'm impatient with my entries, I lose money. When I am patient, I make money. So the whole goal is to make money. So it's really easy. It becomes this self-fulfilling prophecy where it's no big deal to be patient with your entries. You know, I could sit here and tell you that the answer is to spin around in the mirror 27 times every morning before you come into the office. I don't see how that's going to benefit you, but I could say that. All right, ATR is 48.49. Tubed out says, Big Dog, I'm short SpaceX at $200 a share, and I have 150 puts expiring in July 2027. My man, maybe you should have gone July 2026. Just kidding. Tremendous trades. Tremendous. All right, we got the rollover here. Bar 47 opening up into 48. Shit's cold now, man. Be nice if this trade could hurry up so I can go get a top up. What's your stop loss? It's on screen. It's on screen. Everything you need is on screen. It's what was it at? 29,524.50. Just below the wick low of 46, bar 46. ATR coming down a bit, down to about 44, 45. Chat says huge vol above that area. For me, it's a short. Well, we'll see. We shall see, man. It very well could be. The longer you do this, guys, the less attached you are to any one position. This is just a game of probabilities for me. That's it. Any one trade doesn't really mean much. What's crazy is that both you can make money at the same time. That's right, 100%. 100%. I could be, long, you could be short, I could be short, you could be long. We could, one of us could win, the other could lose. Both of us could win, quote unquote, both of us could lose. It's all down to management. And you know, a huge trap that newer day traders fall into is being really emotionally attached to being a bull or a bear for the entire day. Look, just trade price action. If we're in a huge bear trend, I'm looking for any reason to get short. But the second that changes, I no longer care. The second it is a trade, a price action ram setup to the long side, I'm getting long. Okay, you need to be, nimble. You need to be able to transition like water. Do not get emotionally attached. If you're sitting short and you get stopped out, rather than looking at it and getting pissed and saying, the market's wrong, I'm right, homeboy, say, wow, interesting. Okay, I'll trade the price action from here. All right, it's going to save you a whole bunch of money and probably make you a bunch of money. All right, so I got to move my stop there on that up to right below 48. There we go. ATR sitting about 45. Come on now, Bulls. Let's finish this job up here. All right, one ATR right now is about 44 points. Bulls can break up through the 620s. There you go. Let's get up through there. Minute 50 left, by the way, on this bar 49. Come on now, Bulls! ATR, I'm going to call it 45. 40 seconds out till the close up big bar 49, rolling over into the into bar 50. Alright, big bar 50. I have to multitask here. 50 can take out the wick high of 49 within the first 30 seconds. ATR now down to about 42, by the way. This market's had me within 3 points of the current TP. My option to move my stop now off the table because bar 50 could not take out the wick high bar 49 within 30 seconds. There we go, bulls. Keep that guy pushing. ATR 42. Come on, man, let's get that push. Give me that fill. Give me that fill. Full ATR out there. And flat on the copier. Tremendous. Moving on. Tremendous. 215 out. ATR is 43. Question, do you always want the ATR as take profit? Maybe 5 points give or take? No, sir. Not maybe 5 points give or take. And no, it's not always the ATR. If it's a, again, it's nuanced, which is... I go deep on this in the tomb, but we don't really have time for this, nor do people really care to hear it here on YouTube. But if I'm scalping, it could be anywhere between an R, half ATR, 3/4 of an ATR, maybe a full ATR. More day trades, it's going to be more in that mid-range. Intraday swings, it's going to be on the higher end of reward to risk. Man, if you haven't yet, appreciate you hitting the like button for that trade. Not too bad, huh? All right. Well, these bars are getting smaller and smaller and smaller. 47, 48, 49, 50. By the way, you've got that high of that previous little sideways range, which I'm thinking a little more about that high than I was about that low when I entered on bar 46. Really that wick high at 21 I'm kind of looking at. Yeah. Yeah, I'm gonna wait on 51. I also want to see volatility come back a little bit because that ATR is now, it's dipping quick. You see this off a cliff? Down, 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 that red line, that's the ATR, fading hard. Coming into that high, that previous single bar sideways range, you know, to the long side. I don't love it. So I'll wait on 51, see if 51 can get a bit of a better influx in volatility. It wouldn't necessarily surprise me. I know in the face of this is kind of, you know, a hot take. It's not one that I would get short on, but it wouldn't surprise me if bar, you know, 51 were to close as a bear body here. But it's not, you know, I would never short this, just making conversation. All right, tell you guys what, give me 2 minutes. Don't you go anywhere. Be right back. All right, what's up? We've got big 52. Well, 51 ended up closing as a small bull body. And now 52, 60 seconds out. Yeah, I'm kind of watching that wick high of 21. 47, 48, 49, 50, 51. This is 100%, I would consider an outsized bar compared to the previous bars. Is it an outsized bar compared to the ATR? No. But I would say it's sort of outsized compared to the previous bars. That set of 5, 47 through 51. Does that mean that I'm totally against taking it? No. No, but I would like to see how it closes up. I'm watching that wick high of 21. Way back there. All right, let's see. 10 seconds. Stop limit buy goes out. It's a big bar. It's all right. Not scared of risk. All right, beautiful placement. What tremendous placement. Perfect timing. Can't do much better than that. Now, I only want to be a part of this if the bulls want me to be a part of this. And I'll tell you what, I'm going to give it 20 seconds because it is what I would call an outsized bar. I got to pull it. That's no fill, no trade. I gave it 21 seconds. Ooh, I cheated by a second. Wouldn't have even filled me in 30 seconds. That's all right. No fill, no trade regardless. See that hesitation there out of the bulls? I don't want to be a part of that. So now we watch bar 53 and see what it can get done here in the next 4 minutes, 20 seconds. How you guys doing today, by the way? Are we having a good day? What's up? We doing well or what? You know it. Great day. Well, I guess we got about 200 other people that are sitting deep in the red. Manuel, healthy green. Richard making money. Edge cranking through some more evals, doing well. Lewis, thank you, sir. Got a W because you. Great day today. Up 1K on the eval, plus 110 bucks. Pretty good with 1 micro, I guess. That's very good with 1 micro. Yep, big green. Gave away all my profit plus 140. It's all right. Did you follow the methodology? Did you follow your methodology, I mean? If you followed your rules, there's nothing to be ashamed of. Now, if you did and you started doing degenerate shit, you should feel bad about that. That's okay. Pete says, at what point do you determine it's gone high enough to capitalize on a reversal? At no point at all until we get either of, well, you said to capitalize on a reversal, so that would mean an entry, which for me would mean a reversal sequence. But you can also start getting a feel for, okay, I'm going to keep an eye on this. If you do get capitulation, which is not, for me at all, a reversal setup, but it starts putting that in my head. Potentially. Though I'm still looking at it as a trend, even if we do get that. Stu, good day. Clark, plus 1,200 bucks on evals. My man, Matty, drug myself out of a hole today. J-Rob, hit the like button, my man. Yes, please, I appreciate you doing so. Hit like on the stream. Andy says, don't forget to use code BIG. Take Profit Trader, 40% off, and no activation fee. I'll tell you something, man. If you're trying to go full time, you need money coming in. Take Profit Trader lets you take daily payouts. So go hit it. Use code BIG at signup, and you will not have to pay the sizable activation fee when you pass. They'll say, oh, you're in on it. You used code BIG. We will activate it for free instead of 130 bucks per account, by the way. Sonny says, thanks, bro. With your analysis, I'm in a buy from 29,544, and I will hold until 29,900. My man. Well, I hope it pumps to 30K for you. All right, we got 60 seconds until Big Bar 53 closes up. See if we can get a nice clean close here out of 53. Rhombus says, thanks, boss. Just flipped a red day to green. But I thought we only look for 3 average bars before entry. No, that's a basic. A lot of people who just watch the stream think that about RAM. That's not true. It's easy. I understand why people think that, but that's the first thing we try to correct in the trainings and the RAM labs and the Tomb Talks in the Tomb. Because that's what a lot of people on the stream who just watch the stream, they assume that. That's a dangerous assumption. All right, here we go. Let's see. Place that. Another beautiful placement! Let's see. The Bulls can take out that wick high of 53 and give me a fill here within a reasonable amount of time. 7 more seconds. Come on now, bulls. Gotta pull it. No fill, no trade. Next bar. Nah, he says, didn't tune into the stream. Well, why not, big dog? But I did trade RAM today, up $8,700. Let me repeat myself. They say I did trade RAM today, and I'm up $8,700 on a single 50K account. Are you fucking kidding me? It's over. It's over. Tremendous. Good work. That's ridiculous. Can I just say something? Had our friend here who's up $8,700 on a single 50K funded. Traded 20 50K fundeds. They would have had a $174,000 day today. Trading RAM. I don't know what else to tell you, man. If that's not getting out of this fucking the bullshit 9 to 5 that you've been trying to, work up the courage to get out of for 5 years, 15 years, 25 years, I don't know what to tell you. I don't know what to tell you. You're in charge, dude. No one else. Fuck that. What you want to do, go do it. All right, so we're watching bar 54. We're a minute 52 out. All right, we had 60 seconds until bar 54 closes up. I know hearing that some of you guys are like, fuck, that motherfucker. Let me just explain something to you that I had to kind of force myself to learn. I'm very grateful. I tried to learn this as quickly as possible, which is getting desensitized to bigger numbers as young as possible, which is incredibly important, by the way, because all of us, we all grow up with these preconceived notions that, myself included, that like when we were kids, now it's inflation, but when we were kids, $100,000 a year was like, that was the goal, dude. I remember as a child thinking, dude, if I could just make $100,000 a year, that would be awesome. We could have all the stuff, like a sick boat, we could take the family out, ATVs, dirt bikes, a sick place to live. And obviously today, that's no longer the truth with $100,000 a year, but I had the sort of the right idea, but thinking way too small, because these are the preconceived notions that we're all taught growing up. And you need to break it. You guys, there's plenty of money out there. There's plenty of money. The average income has nothing to do with you. At all. Nothing at all. Our friend here just made $8,700 in one day trading RAM on 150K funded. If they were trading 20 fundeds, that's a $174,000 day. You understand what I'm saying? The problem is not a lack of capital for you to go get. But the problem is you think that you're like, man, $250 a year, I can't do that. Why? Where's your evidence that you can't fucking do that? I don't understand. You gotta snap it, dude. Growing up, it has nothing to do with you. What your parents made, what your friend's parents made, the friend that, oh wow, they had money, man. What they made, it has nothing to fucking do with you. The problem is not a lack of capital in the marketplace for you to go get. The problem is you think that you can't get that much. My question to you is, in a market where you can effectively scale this infinitely until liquidity breaks, which is a huge number, by the way, why do you still put these restraints on yourself? I don't get it. It's like some sort of form of self-sabotage. I need you to stop. Please. It's not helping you or anybody else around you, by the way. Your community needs you to make money. There are too many communities in America that are just, there just isn't any. And if you live in one of them, put that responsibility, you fucking carry the boats, it's time to go. And we got bar 55 doing a bunch of nothing. Come on, bulls. All right, we're 90 seconds out from the close up big bar 55. Kenji, how we doing, big dog? Base hits. What's up, Javaz? My man. Nahi, you sound like Kobe today. He said job's not finished. My dude. Beautiful. All right, we got a new bar here, bar 56. 256 brings. So my concern here is that 56 fails, and this turns into a single bar sideways trade range. We don't want that to occur now, do we? So let's see if 56 can get us a bit higher, maybe close us above the wick high of 55. Yeah, ATR dying off a hair here. We're down to 37. You know, Clark, you be careful what you say, my man, because that ATR could say 7 right now. 37's not too bad. But it's certainly fallen here, and we do not love it. But with a fall of ATR comes a fall of opportunity typically, so let's see if we can keep that up. That's right, hey. Terry reminded us what month we're in. These are good summer numbers. Hey, if you were trading last summer, go ahead and throw a W in the chat. Should I do it? Chat, W's in the chat. Like a true streamer now. Fuck. If you were trading last summer, man, let us know in the chat, because last summer was crazy. Last summer fucking sucked. I hated last summer. This summer's been good. But if you weren't around last summer, the reason it sucked is because the volatility, it was just nothing. It was slow. And, you know, we're day traders, man. We need shit moving. We need it moving. Yeah, a whole bunch of you guys trading last summer. All right, let's check in with you guys here. What's up? How are we? Hey, Roensch, closed my trade earlier. That would have been over 2,000 bucks in the profit. Definitely grateful. But I'm mad I let losing 100 to 200 of my winning day scare me out of making thousands. Let me think about what you're saying here. I'm mad that I let losing 100 to 200 of my winning day. Am I understanding this properly? Are you saying you took a profit of $100 to $200? You know, baby, was your original profit target the $2,000 one? Or was it the $100,000 to $200,000? Look, the only thing that matters, by the way, I never here, look at this. Look at this. I got long on 46, right? I took profit, I don't know, go back and check, somewhere in here. I never look at the chart, maybe tongue-in-cheek sometimes, but I never look at the chart and look at it and say, fuck, dude, I could have made, I get the calculator out, I'm like, fuck, dude, I could have made this amount of money. I don't do that. I just don't care. I've outgrown that. I don't give a shit. That side of FOMO, I'm just looking to get my piece, move on to the next trade. The only thing that should matter to you is whether or not you did what your methodology told you to do. If the answer was yes, then you did your job and you should be thrilled. Don't get the calculator out and say, oh man, if I had bought 100 contracts here with everything, all the money that I have, then I would have been up this amount and then I'd have this amount of money. What are you doing? How's that serving you? That's not helping you at all. But if your original plan told you I should hold until X amount of points and you didn't, that's a problem and you need to fix that immediately, right now. All right, we got 56 closing up here. Into 57. Watching 57 now. Keeping a damn close eye on 57. We love it. Chat, the market doesn't owe you a trade every 5 minutes, doesn't owe you the next move or today's biggest winner, only offers opportunities. Your job is to decide if they match your plan. That's right. That's right. Your job is to put on risk that you know gives you a positive expected value on average over a big sample size, accept the outcome and move on. That's your job as a trader. Does that sound similar, by the way, to another business model that has made some of the richest people in the world? Can anybody guess what that business model is in the chat? That being a trader is nearly identical to, with of course little nuance. Anybody? Watching bar 57, by the way. Ding, ding, ding! Vegas! And you say Vegas? That you gambling? No, big dog. Being the house. Being the house is the business model. It's the same thing. The casino has built-in edge. That's the difference. They have built-in edge into their games. They put risk, small sample size risk, on, and then they do it as many times as possible. As many times as possible, with as much dollar turnover as possible. And then they make a predictable profit. If you're able, now our job as traders is we don't have the edge built into our game. We have to maintain it on average, which is why being disciplined and patient is so, and, you know, having the fucking set to put it on when it's time is so important. But as long as you can maintain positive expected value, statistical edge on the averages on your trades, then your job is to just get that sample size up without giving that away on a silver platter. The expected value, right? That's it. That's your job. The business model here really is simple. Don't overcomplicate that side of things, but you should know where's your money coming from, you know? Chat, a red day that you follow your plan and rules equals a good day of trading. A green day where you didn't follow your plan equals a bad day of trading. Now, a lot of beginners, if you understand that, you know, say me in the chat, I want to get a gauge here for how many of you guys actually understand what I just said. Again, I'll repeat, a red day that you follow your, this is from the chat, a red day that you follow your plan and rules is a good day of trading. A green day where you didn't follow your plan and rules is not a good day of trading. That's so important to understand, guys. I think a lot of beginners, they come into this and they just have dollar signs in their eyes. Guys, it's been a little while since I've made this comparison. There's two objects floating in front of your face. There's the dull ball. It's not so pretty to look at. It's kind of boring. And then you have the golden, what's it called, from Harry Potter. The snitch. Is that what it's called? You have the snitch. It's got these pretty wings. It kind of floats in front of you. It looks nice. It shimmers. That's money. The dull ball is edge, discipline, and methodology. Price action, context, logical decision making, loss cutting, patience, profit taking. It's not sexy. It's boring. But every beginner stares at the golden snitch, which is money, and it flies away from you. The longer you stare at the dull ball and give it attention and kind of caress it, it comes right into your palm. And when that happens, the snitch comes to you. It gets jealous. The snitch comes to you and flies right into your other palm. Now you have it, but you got to keep staring at that dull ball. Every new trader stares at the snitch. Don't do that. I get it. It's the goal. You don't get it by looking at it. You get it by focusing on the thing that makes it come to you. Does that make sense? There's a few of you here. Most of you guys are not going to listen to what I just said. I understand that, and that's okay. But there's a few of you in the chat who just internalized what I said, who are going to take that shit to heart, and it's going to change the course of your entire career and life. Up to you. So we got the bears pulling us on back here, right into that little single bar sideways range we saw at a 53, 54, 55. What's the indicator called that puts numbers on your candles? I don't know. Google Ninja Trader bar counter. It'll pop up. Question, what time frame? This is a 5-minute chart that we happen to be on right now. It's a 5-minute NQ chart, Nasdaq futures. And by the way, these bars being counted, it's just counting the bars since the New York session opened. Keeps us all on the same page. All right, we got the bears pulling us on back here. Well, I'll tell you what, guys, I appreciate you hanging out with me here today. Caught a tremendous trade on the close of bar 46 to the long side. If you also happen to take that trade, go on, hit the like button on the way out. I appreciate you guys. All right, back half of the week, man. This shit ain't over. We still got a whole bunch of work to do tomorrow and Pharaoh Friday. I will see you guys tomorrow. All right. Lock in. Ain't over. Don't take your foot off the gas. Fuck, we're just getting started on a Thursday. All right, see you guys soon. Have a good one.